Welcome, everybody. We still have some that are working to join us, but I am so honored and privileged to be a part of this amazing panel. I'm just blown away by their expertise and their breadth of knowledge as we talk about marketing and growing our relationships. So just a couple of housekeeping items for you all. Want to remind you that we are recording and you will receive a copy of it tomorrow via email. Also, for participants, you are muted so that we don't interrupt and we can keep the process going. If you will, please utilize down at the bottom of your screen, there's a section called Q&A. Through there, you can submit any questions that you have. There are a couple of people monitoring that to try to help me make sure that we see your questions. If we happen to miss one and have moved on, we will gladly come back to it at the end and spend some time answering your questions and try to make this participatory and answer for you as we go through. So without further ado, I would like to introduce our truly amazing group of panelists that we have joining us today. So first and foremost, our banking representative is Jon Huntinghouse. Jon is the Vice President of Marketing for Tab Bank. I'm sure many of you have heard of Tab Bank. It's fully online. It's located out of Ogden, Utah, and he has over 10 years of executive marketing experience. And he's been featured in some big time publications, and he's just got some great knowledge from the end user, the banking perspective, to share with us today. We have also got Colleen Wilson. She is the Vice President of Product with MANTL. That's an enterprise SaaS company that helps traditional financial institutions modernize and grow. So they do white labeled software that helps community and regional institutions raise core deposits is kind of the gist there. We've also got Alana Levine. She's the Chief Revenue Officer with Fintel Connect. That's an award-winning marketing analytics company that's dedicated to driving scalable, cost-effective growth in financial services. We've also got Jen Packard with us, and she is the Chief Product Officer for Digital Onboarding. She has nearly 20 years of experience developing scalable processes and programs that empower sales and marketing teams to drive results. So as you can see, we are highly qualified and so glad to have everybody with us. I am Holly Garza, mess up my own name, excuse me. I'm the Managing Director of Financial Institution Consulting with Extraco Consulting. That's a mouthful. Basically, we work with community banks across the country and assist them with anything and everything. Mostly process refinement and universal strategies are kind of our core pieces that we work with. And I'm just glad to be here and to get to learn right along with you all. So with that, let's go ahead and jump in. I know that you don't want to hear me talk so much, but our panelists more so. So let's start off talking about budgets and how winning banks and credit unions are allocating their marketing budgets. So Jen, I really wanted to start off with you. You've done a lot of fascinating research in this area. Can you talk about how much the average financial institution is investing in marketing overall? And then also, how are they and what are they allocating out of that budget to digital marketing?
Yeah, thanks so much, Holly. I'm going to break down the first question between banks and credit unions. So banks spend on average a little less than 0.1%, which is estimated to be about 0.076% of their total assets on marketing spend. Credit unions are spending about 0.12% on average of their overall assets on marketing spend. And just an example, so a credit union of 1 billion in assets at that 0.12% would be about 1 million in marketing spend. Both banks and credit unions on average are spending about only 12% of that overall marketing budget on digital marketing. So with that same example I used above, the $1 billion credit union at the 1.2 million in marketing, that's only 144,000 in digital marketing. So if we look at a similar study that was done by Gartner over the same period of time, CMOs in other industries as a whole, or as a whole in all industries, I should say, are spending 29% on MarTech solutions alone. So you can tell that 12% versus the 29% in MarTech solutions alone, financial institution marketing is just lagging behind in that digital spend world. But they are growing, and digitally forward FIs are spending about 20% of their budget on digital. And again, that continues to go up.
Jon, I know you oversee a budget and you may be a little skewed because you're a fully online bank, but did you have anything you wanted to add to that?
Yeah, I mean, for sure, we skew more towards digital, being a digital online bank. But one of the things that when I first got here relative to where we are now is our marketing budget as an allocation of our asset side has increased quite tremendously as we've demonstrated the effectiveness of marketing and just shown an overall ROI when it comes to the work that we're doing. And, previously we were probably around that 0.07, 0.09 range. But when you're looking at the top quartile percentage, and it doesn't matter what tier, whether 500 million or below, 500 to $1 billion or $1 billion or more, that top quartile, the average is like 0.1, 0.12, but it skews higher, right? And so now we're at 0.3 over at TAB. And it's just because we've been able to demonstrate the effectiveness of our marketing campaigns. And as we've been able to speak that to the board and our executive team, they understand that investment and that it's an investment, not just a cost center.
Well, and I know we're going to bring you back to share how you do that and how you got them to let you do that in just a little while. Alana, you live in the world of analytics. So anything that you wanted to share on this before we move on?
Sure. I think what we find really fascinating, and in the conversations that we have the privilege of having with our bank and credit union partners, is how they allocate amongst their different channels, how they decide to allocate budget within their own overall budget. So what is the line item that marketing comes to? And a lot of, I think, more forward-thinking institutions are getting creative about where they may choose to allocate or contribute their budget within their overall spend each year. And the other thing too is, where I found this fascinating, we just did an office hours session with our a group of bankers, and we asked about the split between product marketing and between brand marketing. And we had very divergent answers. So one banker actually spends 10% of their budget on product and 90% on brand. And someone else chimed in and said, whoa, wait a second. We actually spend 90% on product focused marketing and 10% on brand. So I think that what is that golden ratio and what does that look like? It's always interesting, within your actual allocation of budget, what the motivations or direction is, which I think is interesting to look at.
Absolutely. And I can say that I've seen that with a lot of our clients as well. They seem to be focused on one or the other, but there's very rare that it's a nice blended mix. So with all of that information, I really want to get some insight from you all as to why you think that financial institutions are hesitant to allocate more to digital. What's the background there? Colleen, do you want to kick us off with that?
Sure, I'd be happy to. Thanks, Holly. I think that a really big part of this comes down to what's my ROI going to be on this type of investment. And recently MANTL did a banking impact survey, and we found that 99% of bank executives said that they had not fully embraced digital banking, and that cultural hurdles were the main reason why. Additionally, we know through that same survey that 50% of financial institutions have a digital solution in place, but they're only opening about 5% of their accounts online. And so as a product person, and I'm sure as some of the marketers in the room are thinking, you don't want to allocate more money towards what feels like a leaky bucket. And so when you're thinking about your investment into digital, I would really encourage bank executives and credit union executives to think about it in two different ways. Think about it in terms of your product engine, like what's going to actually convert those customers who your marketers have worked so hard to attract. And then also think about it in terms of marketing. And really, like the best institutions that we see at MANTL, we're really striving to 4x the conversion at least of the financial institutions that we're working with. And so each of those marketing dollars will go four times as far at least when it comes to that product. So start with the product, make sure you don't have a leaky bucket, you have a really strong conversion engine, and then fill it up.
Alana, from an analytics perspective, do you kind of agree with that? Do you see the same kind of information?
Absolutely. I think the reticence maybe is that it is just still really new. So there's a lot of unknowns. There's a lot of fears that are being directed broadly from the rest of the business around, your even sales teams that maybe on the loan origination side that are saying, well, what does that mean for me? And how does digital impact on my ability to do my job? From a digital standpoint, how do we create the same sense of relationship that we do in an in-person? And the reality is, preferences of these customers are directing them more towards a digital experience because they're buying their coffee from an app, in the drive-through. Everybody's doing everything digitally now, and really, quite frankly, banking is no different. So from my standpoint, absolutely, we're seeing a lot more on the digital side, and it's how do you ensure that you can maintain the same level of quality of customers coming through as you experiment, and what are the control centers to put in place? And then how, exactly as Colleen said, how does it more broadly impact the rest of the institution and getting them and their buy-in to processes around digital?
Absolutely. So Jen, with your softwares, what do you have to add to this?
Yeah, I think great stuff from Colleen and Alana. I would completely agree. I think another lens is, and Alana brought this up as well, just the amount of technology, right? It's almost overwhelming, the amount of technology that's out there, and speaking with FIs and speaking with and research, a lot of them admit that their staff, their marketing team, their marketing staff isn't adequately trained on those digital tools. So it's very hard for them to take advantage and understand the ROI that they're providing, because they may not even be using those digital tools as much as they can be. So they tend to go back to those traditional marketing tactics, which they know and feel comfortable with. There's less regulations around them. There's less catching up with them from a technology perspective. And then, but not taking those chances, their marketing tends to then lead to flat results, not bad results, just, no spikes or anything. It just continues to be flat. So I think it's definitely a lot of technology out there, and a little bit of overwhelmingness to marketers.
Jon, as an end user, and somebody who's tackling this, what do you see for your organization? What can you share from that perspective?
Yeah, a little bit on what Jen was kind of talking about. I think one of the reasons why we don't, generally speaking, we don't invest in things that we don't understand, right? And when we're trying to get, the board, to invest in the marketing, and we're having troubles doing that, it's typically because we're not articulating a great, a story or a case for marketing, and they just don't understand it, and it's hard for them to invest in something that they don't understand. Likewise, even for marketing, right? Like if we don't have someone in-house that really understands digital, it's really hard to invest in something that we don't understand. And so one of the things that, as I've kind of been on these types of panels, or worked with some colleagues, is really advocating on the idea that you don't currently have someone, either by training or by recruiting. It really is table stakes of getting someone that understands digital in-house. And we've done that here at TAB, and one of our best hires literally has no financial background before, but has an extremely strong digital background, and it's one of the best when it comes to paid search and stuff, and it's been a game changer. The work that she's done, and supposedly things that are outside of her wheelhouse, because she understood digital and she understands the dynamic, she was able to perform extremely well in our working capital side of the business. So having someone that understands it is, in my mind, it's just table stakes, because it's hard to invest in things that you don't understand.
I couldn't agree more. And I see that, and it's such an interesting take that you have as far as hiring somebody without financial background. I think that's a pitfall that we fall into a lot in the banking industry, is that we always think that financial background has to be there. They don't understand us otherwise. And so, I'm on board with you. We believe in that in our organization, is, sometimes outside the boxes can be very beneficial. So let's talk about affiliate marketing, otherwise known as pay for performance marketing. Alana, can you share with us what you've seen? What share of spend does that partake? Does that receive?
Sure. So for those in the audience who maybe aren't familiar with affiliate marketing, I think if you name, a Bankrate or a Nordwell, you probably are. If you've, in some respects, watched a YouTube video and then made a purchase after watching that YouTube video, you've engaged in affiliate marketing. To us, we kind of bucket it into influencer marketing, affiliates. It's about partnering with a trusted third party that's going to help tell your bank or credit union story about what makes you valuable in the products that you have to offer. And the value is that it's a very results-based channel. So it's not just visibility out there. You're actually partnering so they can refer you the right customers. It's a very underutilized channel at the moment in the more community and regional banking space. And I think it's something we're really kind of trying to work on and really crack the nut. How do we help these different banks capitalize on this channel and do it well? We've certainly had a lot of really interesting discovery in the last 12 months. But we've surveyed our bank partners, and I think on average, less than 20% of them are capitalizing on the channel. So it's of all of the digital tactics between social and Google and display, and it's the least used, but it's actually the most impactful in terms of acquisition. So when you look at, the large institutions out there that you may be butting up against, whether it's a JP Morgan or a Chime or Wells Fargo, it's 40% of their funnel. So if you look at all the tactics they're using that's driving, as my CEO would say, bums on seats, like real customers in the door, it's driving 40% of those new customers. And it's just because of how consumers make their buying decisions. They're Googling online, where can I find the best mortgage? How can I refinance my home? And they're coming across these third-party outlets. So it's an important channel. It's underutilized, so it gets very little budget at the moment. I generally say if you can allocate 10% of your digital budget to experimental, this is a great channel to kind of test and learn. So that's my suggestion there.
Jon, are you guys utilizing this channel?
We are, and we haven't gone full-fledged yet, but we're actually partnering with Fintel Connect on this, and so
very nice.
it's been really good. And I agree with Alana in terms of being an underutilized channel. This is crazy underutilized. I've been on both sides of this, both on the brand side as well as kind of the influencer side, both in my agency work and here. And one of the things that, frankly speaking, banks do a poor job of is telling our story. And one of the things that, outside of just getting acquisition and having a low CAC and getting, individuals through their door, these publishers, these influencers are amazing storytellers. And they oftentimes do a much better job of telling our story than ourselves. Not to mention, no one cares about what the brand says, right? Nobody cares that Tab Bank's, like that I say that Tab Bank is awesome. Like no one cares. But when you have a trusted third party or trusted source that is validating, and the work that we're doing here, that goes much longer. That goes a longer ways than just simply Tab saying that we're a great bank to bank with.
So I'm going to ask off the cuff, and you guys tell me who wants to jump in for this. But for our community, our smaller community bank participants that are on here that maybe are, within a 100-mile geographic region, and they're sitting here going, this sounds great for somebody that's in a full state or, across multiple state lines. But how would you guys address that? What would you say that the possibility, and is it still worthwhile for those smaller institutions?
maybe I'll jump in just quickly because we just had this conversation very recently, and it's one that comes up quite a bit. There's a lot of kind of grassroots approaches you can take with this that you can do yourselves without ever having to engage someone. So I agree with Jon in terms of knowing and being familiar with how to work with the channel, but this is something where look at it as more of a broad stroke referral approach, where you're getting someone who has maybe a little bit bigger platform than their friends and family that can help to tell the story. So that might make it a little more accessible. And then look to your local community and who's got personality and who's got, you know, whether it's a local radio host, whether it's an athlete. We talked about this in the ABA Bank Marketing School about partnering with student athletes in your local universities. There's influencers all around you and you just have to engage them. And the one thing I will say is don't expect them to be experts in financial services because they won't be, but they'll talk about their experience banking with you. And that in and of itself, the positive endorsement they'll provide opens that door for you to create some new relationships or maybe people would have never considered your bank or credit union before.
Thank you so much for that. Okay, so let's talk about the fact that we are spending the largest portion of our budgets to acquire customers or members. So really what we're targeting is opening more accounts. But we fail to really appropriately nurture and develop our existing relationships. How should we be thinking about splitting resources between acquisition and driving organic growth? And that's Colleen, let's jump in with you.
Awesome. I love this question. I used to work for a company called Edward Jones in the wealth management space. And I remember at the time, Wells Fargo was Edward Jones' big competitor. And Wells Fargo had this saying like 8 is great. 8 products and services gives you a customer for life. And at Edward Jones, I think it was 4 during the time I was there. But I think the bottom line is if you're going to grow a customer base, you have 2 choices. You can acquire new customers or you can nurture the relationships that you already have. When I look across data on the MANTL platform, about 20% of the accounts that are open digitally are opened by existing customers. And so if you're investing in digital channels generally, you're going to organically attract a larger share of wallet without necessarily adding more marketing dollars. And then I think it comes down to having a really good account opening platform or a solution. The product should really do the rest and put those marketing dollars to work. And I think the best account opening platforms out there, they leverage what they already know about the customer to identify next needs and cross-sell those products, but also make it a really seamless experience so that you already know where I live. You shouldn't have to ask me again what my address is. You already know I'm in your core. You should know where I live. You should know some of these facts about me. And so I think that the best platforms out there, really the product does the rest of the journey of making it seamless to sign up for that second, third, fourth, fifth account.
Jen, I want to jump to something that kind of ties into this, but as we're looking at that, do you think that plays into, and why do marketers struggle to get bigger budgets, win bigger budgets from the leadership?
Yeah, it's a great question. And I love this question because I'm a super data dork. So I'm all about ensuring there's alignment on the, I think it's super important for marketers to first have a seat at the table when management and executives are talking about their strategies. They have to have a seat at that table. They have to be aligned on the business objectives that their financial institution is putting in place. I think it's really important for them to understand the status quo. So, okay, these are your initiatives. This is what we're trying to enhance. So let's just say direct deposits and trying to enhance deposit growth. Okay, well, what is it now? And I can do these strategies to potentially change that benchmark, that status quo by X%, but I need to understand what that status quo is. So I think it's really important for them to have an understanding of getting aligned with management and executives, aligning their key plays or their strategies around those objectives, and then being able to understand the current state and being able to clearly articulate what their strategies will do to drive growth there and what change that that they can have an impact on. That's really important to be able to get a bigger budget, I think. And Jon actually talked about that in the beginning a little bit. So I 100% agree with that.
And with that, I want to John, we're gonna kind of wrap this part up with you, but in winning that bigger budget, I'm sure part of that has to do with proving the value of your efforts, and you mentioned that. So Alana, from an analytics perspective, can you kick us off on that, and then we'll wrap this part up with John and move on to kind of our next topic.
Perfect. I'm going to keep it really simple, and it's measure, 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 and measure across every stage of the journey. I know it seems really obvious and basic, but I can't tell you how many times we come across partners of ours who are working with agencies. They're spending money on digital, they're spending money in other tactics, and they can see what's kind of happening here. We've got great impressions. People liked our social posts. We've got this activity. They can see what's happening within their onboarding flow and origination flow, maybe on their website from an analytics standpoint, very rudimentarily on like traffic. And then they can see data in their core. But guess what? These guys need to talk. And in order for you to actually know what you're putting into the funnel, if it's actually resulting in real customers, it's really important to connect those dots, because that's how you make your marketing team a profit center, not a cost center, because then it just becomes a math equation. It's this plus this plus this equals the value of this at the end of the day. Let's stop putting money here and put more money here, because guess what? It's bringing us exactly the type of customers we want. So that's our goal for every bank marketer is, I say, don't spend money on marketing until you can get that piece first, and then invest, because then you can start to test and learn.
Excellent. So John, you had to get the seat at the table and you had to win the money. So share your wisdom.
Well, I think there's a lot of things that you can approach this as, but when I first came here to Tab, there was just a bazillion things to do. One of the things that I always say is, marketers don't starve, we drown, right? It's not that we don't have enough to do. It's like we have too much to do. And when we're stretched too thin. And so what we decided to do is, like, we need to get wins, right? And we needed to demonstrate and show that we could, as we invest and as we do marketing the right way, and then have our data there and have it tied together, that we would be able to kind of demonstrate those results. And that's what we did. We decided to, we knew that our social sucked at the time. And I was like, it pained me because I'm like that's where I kind of got my teeth in when it comes to marketing, but it wasn't our priority. And so we just had to leave that on the table for a second. But you need to get those wins. But I would also say, a little bit of what I said earlier, sometimes marketers get into our own bubble, and we really do need to understand, if there are KPIs and metrics, at the executive and board level that we don't understand, we have to understand what those are. Because when we are just talking in marketing speak and marketing metrics, it's really hard oftentimes for these executives to understand what that actually means in terms of, impressions or engagements, or, even when you're talking about customer acquisition costs, it's like, okay, well, you lowered that, but I still don't understand, does this mean that we have a better customer base? Are they more profitable? Are we acquiring the wrong customers, right? And so really from a marketing standpoint, I think marketers could do a much better job of understanding the high level business KPIs and being able to tie those two. And if you're able to tie those two, and kind of what Alana was kind of saying, and then you go full funnel, then it really does become quite easy. And then you understand the levers that you need to be able to pull. You know where to invest and where to divest, and reallocate your resources in order to meet the strategic KPIs and goals and directions that the board and the executive team wants to achieve.
Well, that was the perfect segue. And I don't think you really knew that you were going to do that for me, but into where I'd like to go second, which attendees, forgive me, I'm going to go out of order just a bit, but I want to move now into how and where. So we've talked about getting the budgets and identifying all of those pieces, but how and where do we invest so that we do get the biggest long-term gains out of our spend? Colleen, what can financial institutions do to ensure that we're focused on really capturing more of the right customers? So like John was talking about, the executives want to know that. Are we getting the right customers? Are we improving what the bottom line is and what our deposits are and things of that nature? So talk to us about that, customers and members. How do we make sure they're the right ones?
Of course. Well, I think it goes back to, I'm just going to keep quoting what Alana said, which is measure, 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 and go back and measure everything that you're seeing across the board. And I think that there's two ways to look at this. I think you start with your data and you take a look at, and what I think is so interesting here, and I love it, is coming from a product management background, a lot of times PMs own the P&L of the business line. And I think that we're seeing a really different time in these fintech companies, especially where the P&L is owned by multiple parties: marketing, sales, revenue, product, support, CS. And it's great because at the end of the day, the customer really benefits here, because we're all looking at not how is my part fitting in with everyone else within every other part that touches this customer and creates this experience. On the product side, a huge part of making sure we're capturing the right customer is to meet them where they are. And for a lot of financial institutions, especially, this is a hybrid approach. It's both digital, it's also in person, in branch. It's mobile first, it's day and night, it's agnostic of time zone, it's agnostic of location. And so I think if you're choosing a digital experience that allows you to meet customers where they are, and in any stretch of the imagination, and then you're measuring that, that's the biggest way to start figuring out who those right customers are. How did they find you? What did they do? What products did they use? What happened next? And then really look to see, how can I fill my funnel with more people like this?
Absolutely. And you hit on so many pieces. And I could tell you that if my executives of the bank that is our affiliate were listening prior to new leadership, we've had some succession, but a few years ago, they would be like, well, our little out in the middle of the country branches are not going to adopt that. But the reality is that we showed them that, the first time we weren't there to be able to give them the cash they wanted or things like that, they did adopt those channels, and COVID has really, really exposed that, I think, to a lot of leadership. So Jen, I'm going to jump to you. What should our emphasis be? What should the financial institutions emphasize and place their emphasis on for driving that new growth versus organic growth? So let's switch from organic to new.
Yeah, absolutely. And I just read this morning, that 70% return of initiatives targeting existing customers versus 10% when targeting new, according to PwC. I think that's a really strong stat. I also think that when marketers are looking at the balance of new versus existing, they should be looking at their portfolio and understanding stats like that, right? Where is the money coming from? Even when you look at acquiring new customers, it can go from 300 to over 1,000 to acquire a new customer when you have revenue and profit within your existing customer base. Another study indicated 72% of financial institutions identified account acquisition as the primary driver, so that organic growth. However, 86% of consumers say that they are not interested in switching at this time. However, they are interested in potentially looking at another FI for cross-selling opportunities, like to secure a home loan or an auto loan. So while you're trying to focus on getting a new accounts, other FIs are trying to snag that cross-sell opportunity from underneath you. So it's very, very important to understand your customers and your members and their needs, and to be loving them, because you are competing with other financial institutions to get that business.
So how do you see marketers? What can they do? What can their job? How can they better deepen those existing relationships? What should they focus on? How do they deepen it by anticipating the changing household needs?
Yeah, absolutely. I think, understanding your customers are super important, and Alana mentioned it as well. Understanding the data. I know it's in different systems. It's challenging, but if you stay focused on, okay, these are, again, those key strategies, those key objectives, you can start small and try to get the data for at least that full picture. So when we look at that, I mean, personalization is really, really important. Understanding what drives your customers and members and understanding them as a human being, not just a contact on the other side. And you can't do that level of personalization. It's not just first name, last name anymore, right? It is truly understanding them. And you can't get that without understanding the data and without digital tools. And this is going to become even more and more important with Gen Z and the millennials. They want that type of connection with whoever they're doing business with, and that's a pretty big market right there. So you can't get around that personalization. So I would say personalization is probably number one, understanding your customers and their needs.
And I can tell you, coming from working with, banks and credit unions across the country, they all say we know our customers, but it's getting that data into something that your marketing team and others can utilize, right? So, in doing that, what should they be doing to obtain that and to have that more unified view of their data?
I mean, it's when looking at the digital tools and working with their IT, a lot of IT departments are trying to do a very similar thing in centralizing data, right? It doesn't mean that you're going to have a business intelligence solution or a BI tool right away, but being able to try to get to a centralized data hub of some sort and looking at tools that allow you to get, if you can't get that full business intelligence or a centralized data warehouse, looking at digital tools that allow you to at least see your engagement efforts and be able to measure those engagement metrics, I think are really, really important as you inch closer to a centralized data hub or a business intelligence type of tool.
Jon, I'm curious because, with you being fully online, you don't have those traditional lines where, so many of us on this call are thinking, how we interact within our branches. So give us some insight on how we can, through the online and through our digital channels, obtain that.
Well, I mean, especially as marketers, we have to get out of our kind of pre-purchase bias that we have. So when you're looking at the kind of full circle, the pre-purchase and purchase and post-purchase activity levels, we are crazy over-indexed on the pre-purchase, right? I mean, that's what we do. That's what marketing is traditionally known for. But having more of a bias towards that purchase and post-purchase phases of that lifetime or that customer journey is wildly important. And as Jen was talking about, personalization, one of the problems that we run into when it comes to data is you're going to run into, and different banks and different things are going to be different here, but you're going to run into data, ambiguous data, right? Where it could mean multiple things. But the easiest way that we found to cut through that ambiguity literally is talking to your customers. And so when we did a massive deep dive on this with our working capital and strategic partners that we had. And as part of this data, we broke it down. We took all of our assumptions that we had, and we created this assumption checklist. And we took our institutional knowledge and paired it against data, and then also what was actually the case. And a lot of the assumptions that we had based on data was wrong because we inferred incorrectly the data that we were looking at. And one way to get through that noise is literally talking to the customers, and not just asking them like closed-ended questions, because that doesn't really add a ton of value. But as you ask really open-ended questions and just like listen, right? Like you're playing the part of a police detective and just letting them talk. And they are just going to reveal things that you had no idea. You're like, holy cow, like they have 42 accounts, like, and they don't even realize like how many different, financial institutions that they're tied into with all of their different things that we have no visibility in, right? And so we assume that we're the primary account, or at least one of the primary accounts. And it turns out like we're not even the top tier, we're tier 2 or 3. And so then you're like, okay, well, this gives some context to the data that we're seeing, and it helps you make better data data-driven decisions when you have context, and oftentimes that context comes by just speaking with them.
Awesome, thank you. Colleen, I know you probably have some comments on that, and I want to tie that in with kind of my final question in this group. But, you know, as we move deeper, and digital's not going away, I think it's only going to get deeper into our future and how we're going to have to play into that. You know, a lot of what we hear, especially in the community banking world, is, well, is it going to be robots, or is there going to be anybody around to help me? So what role are our humans going to play? And then, you know, what roles automated, and what should be manual in order to maintain that personalization?
Oh yeah, that's such a great question. And I'm sure I'm sure everyone has thoughts on this, but I think that, you know, as a technologist, I will always have an appreciation for human work. Humans created technology. We create the code that creates these digital experiences. And there will always be a role for human interaction when it comes to financial technology, because you're dealing with people and their money. We are asking, and I say this to every person that works on my team and every person that works at MANTL where I work, is remember, we are asking people for their most personal details, their most intimate details. Never lose sight of that. Always keep that in mind. With every line of code you write, with every user experience we design, we must keep that at the center of why we come to work every single day. And I think that, you know, as we move forward and we see what's happening, we have access to all this data, and it's so powerful. But there's always going to be two key places, from my perspective, for human interaction, which is personal connection and judgment. There are always going to be situations that the machine cannot solve. But what machines can do is augment that human experience. It can pull together the data that you need to make those decisions better, to make those decisions richer, to make those connections richer and more personalized. And so it really isolates the part that will always be human driven and automating away the rest.
Jen, from an analytics and from a marketing perspective, you know, what do you take into that, and the human versus the automated, and what that experience should be?
Yeah, first, I love what Colleen said. That touches my heart, because I 100% agree that you never want the human to go away, and hopefully the human never will. As we talk about the metaverse and all of that, I don't want the human to go away. So I love that, Colleen. Yeah, I mean, I think this can be different for every financial institution, but I think it's just enhancing both sides of the equation. As Colleen was saying, it's not about taking away the human experience with digital, but pairing them together to get to the ultimate scenario for each. So for, you know, when we look at what consumers are looking for and what people want, right? One thing is that they want to be able to have instant support. And hopefully, you know, bots can help with that. You know, 80% of communications will be between a bot within the next few years when you're looking at B2C communications. But it's really, those digital tools should be helping a need. And then if you flip over to, you know, the human side and enhancing it with digital, you know, when you're in branches and you have online and you have account openers still opening accounts within the branch. I think Colleen made a stat of about 5% are still opening account or only opening accounts online. So that's a lot of accounts being opened in the branch still, right? So give the branch staff the digital tool to be able to guide their customers and members and be able to use that as a training tool as well. So you have consistency in the steps and the experience that customers and members experience. And I think that's really important. And if you're using the same tools in branch and online, oh, look, all of a sudden, again, your data starts to come together. The data is consistent and the experience is cohesive between the two. So I think that's really important. And I did mention the metaverse, and I think, you know, it's there, whether we want it to be there or not, it's there. So to just keep an eye on that as marketers, you know, I think that's important, but I'm all about the human experience as well.
So John, you don't have the face-to-face experience per se, and I can appreciate what you do because I'm telling on myself, but I'm a customer. So share with us, help us with what you have done and how you tackle this without having that brick and mortar, if you will.
Yeah, so it still is. So our challenge is kind of the opposite, right? It's how do we interject more of the human touch and human experiences into what's primarily a digital transaction and digital flow. And so we do, like we invest heavily into technology. But kind of going both with what Jen and Colleen was saying is that, I mean, the human element of this is always going to be there. And but it's comparing, it's bringing in that technology and allowing that the technology side of things enhance a human experience. And so, like an example of that with us, right, is internally we call it SEGO, but it's like customer 360, right, for our customer service reps, where they have a full view. Like when someone calls in, they have a full view of all of their interactions. Like if this is like their 9th call in the last 20 minutes, yeah, that's probably not going to start off really well, right? Like, and so, but it's better than going in blind, right? And so, but you're leveraging technology to enhance and help us as humans provide a better experience because we have a better context of what's going on and what the customers are experiencing or what they're going through. And like I said, for us, it's interjecting those human touches, right? And despite the fact that we're a digital online bank, the number one, like by a mile, if you look on our Google reviews and whatnot, literally by a mile, the number one, when thing that individuals say or our customers say, they'll either call them out by name or they'll talk about the individuals that they spoke with at the bank. It's still that human interaction, even though we're a digital online bank, but personalizing that experience and kind of going with what everyone was saying is leveraging technology to enhance it, but finding ways to interject that human experience with these customers.
Okay, so I'm going to keep you with me for a minute. I wholeheartedly believe that one of the best ways we learn is clearly through mistakes, right? It's one of the reasons I have a job that I have is because back when Universal started coming out, I made all the mistakes before then. So let's talk about mistakes that financial institutions make. And I think one of the biggest that is still out there, and it's so prevalent, and for all of us on the panel, probably we want to shake our head, but institutions still allocate a significant portion of their marketing budgets to those traditional tactics, things like print ads, direct mail, don't get me started, and billboards. Why, John? Why is that still the case? And Alana, I'm gonna bring you in right after him.
Yeah, so first and foremost, I think it kind of goes to what I alluded to earlier. We don't invest into things that we don't understand. And therefore, we invest into where we've been because we typically have some kind of data or at least familiarity with those activities and channels. But learning, again, if we're really customer centric and customer focused, whether that's something forward, right, like the metaverse, or when we're talking about social media or just traditional digital marketing, but if we're going to actually meet the customers where they're at, right? I mean, it's the whole reason why we started to go into TikTok and Discord. It's like who does that? Like, why would a bank do that? It's like, well, because that's where they are. Like, that's where our customers are, and that's kind of the community service that we want to start to build out. And are we making a crazy amount of mistakes along the way? Yeah, like because we're trying to understand it as well. But just because we're not super comfortable with it yet doesn't mean that we don't need to be there. And then as we are investing our time and our energy and resources into those spaces, we naturally become just better. We understand that space better and do more in it. And so I could go off on a tangent. I won't go off on the whole brand side of things because I think there is room for the traditional side of things, but I just think we do a poor job of it. But when it comes to why we're not investing more, I really do think it's just simply that we don't understand it and that we don't have that expertise, which I think which is really table stakes at this point of having in-house knowledge of these channels. And if we don't have it, at least have someone that we bring someone in that can help speak to that and help give us context in those channels and spaces.
Alana, you want to add anything to that from your side?
Yeah, I think Jon summed it up really well. I'd say that maybe from my perspective, what I'd say, I think the familiarity thing, it's no matter how big your organization is, change is scary. And I don't care how big you are, it feels like moving the Titanic sometimes. And we've been there, even just in how we support some of the partners we work with, and just even in, what am I saying? Our own business. It's challenging, even though we're a fintech, or we're not. So I can appreciate it. And it also comes down to, I think, the locus of control. So when it's channels or things you're familiar with or things that you own and assets that you have control over, it's way easier to say yes to that. Especially when there's already budget that's been earmarked for it and you're scared they're going to take your budget away if you screw it up. But I think, where there maybe is less control a little bit, and as you experiment in digital channels where your customers may be able to interact with you and say things that you maybe didn't want them to say, or look at it as glass half full, as an opportunity for discovery, an opportunity to test and learn, and it's measurable. So
I hear you. Colleen, we're getting down to the end of the hour, so I've got 2 more questions I want to get in for you guys. Colleen, I'm going to start with you. It can be really difficult to access the data. We kind of alluded to that a little bit earlier. And that often means that marketers are forced to measure their campaign performances, whether it be for a product or for a brand, on leading metrics instead of really meaningful metrics. So what are the ramifications of that? What have you seen with that? And what advice would you give to those that are finding themselves in that situation?
Yeah, it's a great question. I think that the biggest ramification that we see for this is a lot of activity with very little impact. And again, you're filling a leaky bucket and you're optimizing for activity versus outcomes because you don't have full visibility. This can lead to a fragmented customer experience because every piece of that client's journey and that customer's journey, that data is housed in something that's not unified. And I think that the antidote for that is to build a unified data layer. And this is something that I am very passionate about, as I know many people on this call are. Like, give me all the data. And unfortunately, in this industry, a lot of the various components that these financial institutions need to use to do their jobs every day don't play nicely together in the sandbox. And I just got off of a customer call earlier today, and I didn't talk about my product at all. I actually advised them, I go, what else are you using? Because how are you going to bring all of this together? And I know all my competitors' products because I'm like, they have an API, we can use that. I have an API, you can use mine. Here's how you build that unified data layer so you can make smarter decisions and hit the goals and the outcomes that you are trying to reach. So if there's one thing that I would advise them to do, I would take a look at what data lives in what reciprocal at and who knows what, or what knows what, and what access points do those have, and how can you build a bit of play connects. How can you connect that data together and build that expertise in-house to make smarter decisions?
Thank you. Very well said. Okay, so last piece. We fail as marketers often to measure the ROI of our efforts, right? A lot of times we're looking at response rates and who brought in their little flyer or their pamphlet that we've sent out. So in order to get those bigger budgets, to make the best of our dollars, we probably really need to be looking at that return on investment. Alana, I want to start with you. What advice would you give them on that?
Sure. It's probably, I might repeat a little bit of what Colleen said, because I agree with everything you just said related to the metrics and the right levers and pulleys, to look at. But I think there's 3 things I'll say. One, and I did write this down because it is very important to me. One is identifying the problem, because just because you can't measure ROI doesn't mean there's one problem that's causing it. So it could be you're looking at the wrong metrics. Could be you can't track the metrics. You've got the metrics right, but you can't really track them. It might be limitations and skill sets on your team. So to Jon's point, getting the right brains in the room. Your partners that you're working with, your technology partners may have limitations, or maybe you didn't know that they have things that exist, those APIs. So it's really define what the problem is first and use the intelligence within your organization to do that. because you can't solve a problem that you haven't really defined. The second thing is look at what you've got at your disposal. So, everybody has limited resources. So it's the people that you have, the tools that you have, or the partners that you have internally that you can lean on, or where there's gaps in those resources you need to fill. And then you can come up with a plan to address what those ROI and measurement issues are, and understand what success really looks like, and kind of work back from that to see how you can get there.
Okay. Jon, any final thoughts for us as we come to the end? We don't have any outstanding questions, so we can use these last couple of minutes to get some final thoughts from you. And then Jen, I want to get your final thoughts as well.
Yeah, I mean, I don't have too much to add onto what's already been said, and Alana, I think, kind of hit it on the head for the most part. The only thing I would continue to iterate, right, is kind of thinking through and tying those business metrics into the marketing metrics. Like when we're trying to understand ROI, like ROI from a marketing standpoint, and like I ran into this all the time where I thought we were doing amazingly well when from an agency side of things, and we would go and present our metrics and everything that we thought the campaign was doing well, and then the client would come in and just like nothing's changed, like everything's kind of awful still, right? And we had a disconnect between what we were looking at and what they were seeing, and so it does take a little bit of playing around with and trying to understand what are those going to be your lead and lag measures, and being able to define what those are. And the other thing is, it's just a random anecdotal thing, is almost never your true lead measures when you're looking at your lead KPIs, are they going to be standalone metrics? They're almost always going to be in ratios, because because they're tying in multiple elements, and very rarely does one metric, cascade every other element of it. But if you're really truly trying to find those lead measures, like it's almost always going to be a ratio that brings in multiple metrics and data points.
And Jen, 1 minute.
Yeah. Okay. So they said it so well. The only other thing that I would add is do not wait until after the fact to try to figure out how you are going to measure your return, right? That should be something that is figured out before you launch and do anything. And even if there's no true, it doesn't have to be potentially a dollar amount unnecessarily of why you're doing something, as long as you're stating your objective beforehand and it's known and it's clear and it's approved and everybody agrees, then it's success, right? So do not wait until after the fact. Do it before, understand your current metrics, understand where your business is with what you're trying to move the needle on. And yeah, just don't wait until after the fact.
Right. We all know sometimes sticky and deepening that loyalty of the customer or member is just as important as a return, so as far as monetary return. So, well, to be conscious of everybody's time, we're right up against the hour. Participants, the attendees, we really thank you for joining us. And of course, this esteemed panel, you guys have been fabulous. Thank you so much for taking the time to share your expertise with us. We really appreciate it. And with that, we're going to let everybody have a great day. Remember, we'll be sending this out to you.
Thanks for having us. It's been fantastic. I learned so much, guys.
So did I. So thank you.
Me too. Thank you, guys.